Hello, I'm Stephen Hode, trader and founder of The Stop Hunter. In this video, how and why you should really be trading the Nifty 50 stock market and the takeoff Indian economy in 2021. Plus, I give you 3 technical analysis approaches to trading this market. Firstly, a risk disclaimer. Trading involves a high degree of risk and can lead to large financial losses. Always seek the help of a qualified financial advisor, and the content within this video is and should not be construed as investment advice and is only presented for informational and educational purposes. So with that out of the way, we need to answer the question, what should we invest or trade on Indian markets? Well, I'm going to keep it brief and say, 2030 India is going to be the 3rd biggest economy behind China and the United States. Currently, even after a disaster, bad year of 2020, it still grew, and it's predicted to grow even faster next year. It's got some really good economies: food, manufacturing, tech, IT. The workforce is getting more highly skilled. The government is investing in infrastructure. It's not really going to be an emerging market as it's classified now for much longer, and we're forgetting one other big thing. It has a population of 1.4 billion people, so there's a massive market internally for it as well. So what's not to like about them, and how can we trade that? Well, there's a stock market out there called the Nifty 50, and that's what we're going to have a look at next. The Nifty 50 stock market index is made up of the 50 biggest, best companies, corporations in India. There's some technical stuff behind it, how you actually get into the 50, but all you need to know is it's the biggest and the best. And there are some great names inside there: Tata, Reliance, Infosys, various banks, car companies. It's well stocked: pharmaceuticals, IT, industrials. It's got the lot. It's a really strong index, and it's been growing and growing. So let's take a look at a quick chart to see how it has actually performed over, say, the last 10 years. So here we have a monthly chart, candlestick chart of the Nifty 50. It goes back to 2012, and really we can see it only going one way, and that is up. There was a big move down July time of 2020, probably near 40%, as call it its roughest period, and since then it's recovered really strongly up to all-time highs, just under 14,000 as I speak. So really, in terms of a chart, it's been bullish all the way, and marries into the growth period of its economy. In terms of where we could expect the market to go in 2021, well, I like to use a tool in TradingView. It's just up here on the left, and for those who don't know, it's called the trend-based Fibonacci extension. So I'll click on that. I'm going to find that recent down run there. I'm going to draw the recent trend in from the high to the low, pull that back like so, and that's going to give me some new levels. If I just tidy that up a little bit, we can actually now see a expectation based on Fibonacci that we could be looking around the 18,000 level. So that's quite a move, nearly 4,000 points. We can measure that exactly. Let's take a look. Yeah, just under the 4,000. Well, it's about 4,000 points. And that's nearly a 30% increase from where we are today. So it's got some great bullish upside. And in terms of support and resistance areas, you can also use this tool to give you key areas. And these are longer term areas, remember, because this is a monthly chart. You've got 11,500, just under the 10,000, and just under the 7,500. So also very nice round numbers to be aware of for setting stops and your risk management in the long term, but potentially great upside there.
So I think we know now why we should trade the Nifty 50, but the important question is how we can trade it. And access to the Indian stock market is historically quite tricky if you're outside of India. On the NSE you can trade futures and options on that market, but for anyone outside India, probably the easiest way is through CFDs and spread betting. And I use a couple of brokers to do that. I use City Index and ForexVox, and I've put the links down below that you can follow if you want to use those brokers. You can use your own, but I know that those two have got very good spreads on there, which is important for your strategies when you're trading such indices, because the Nifty can lend itself to day trading. It has a 9-10 point spread, so you've got to look for a reasonable move to make your profits if you're into the real fast strategies. But really I recommend CFDs and spread betting for the rest of us to get access and trade that market.
So a quick trading tick list, and you're wondering why I put up water running there. Well, actually that's to signify liquidity. The Indian Nifty stock market, very good liquidity, so you can get in and out of your trades, your orders very easily. The price moves maybe 100 to 300 points per day, so plenty of scope for strategy creation. Annual volatility 20-30% per annum, as we've discussed already. Low spreads, look for 9-10 points. And time wise, if you're in Europe, Africa, Asia, it's a very good market to get involved with, because it fits in nicely with your trading hours as well. So many ticks as for why you should be trading either day wise or longer term, swing strategies, that sort of thing. All in all, so far so good. So now let's go on and look at 3 ways you could use technical analysis to trade the Nifty 50. I love trading it using technical analysis. Actually, I automate and systematise my trading strategies, but there's thousands of different ways you can trade this Nifty index, and you've probably got your own ways to do it, but I'm just going to give you 3 ideas in different time frames or setups that you could maybe contemplate building into your trading. So let's take a look at the first setup. Now for my first setup, I've got a line break chart here. Now calling the turn, buying dips, spotting the reversals is extremely difficult, and the line break chart from Japan really takes away a lot of the noise and makes the changes in the price direction, the trend, a lot easier to observe. And I've got a basic setup here to show. This is what I call a medium term, 4 hours chart view. It's got a couple of indicators on there, Bollinger Bands, DMIs to help with timing, moving average. But the important thing to see there is the transparency of the change in direction. Black bars there are up, red down, and what I do is I slow the trend down in the line break chart, maybe to a 5 or a 4, but then I change the rule slightly. I get on it quicker, so after a 2 break change, for example. So we can see down here it's a short trend, and then it switches, bang, you're into a long one, again 2 and you're in down, and keep on going. 4 hours, that's over 3 or 4 months, lots of different trades to be in. So if you want to get those dips, you've got a bullish viewpoint, say, on the stock market, and we're in a downtrend, you wait till the reversal comes in on the line break chart and you're in. So really nice and simple setup, and very usable on the Nifty 50. Now our second setup is also quite interesting. So here we have a Renko chart. Some of you might not have heard of Renko. It's another Japanese form of charting. It takes out the noise. It makes the chart look really, really simple. Red blocks, bricks, down, black, up. In this example, I've again got a combination of indicators, a bit of regression, DMI, stochastic, darks, box breaks, Bollinger Bands, all sorts of things thrown on here, but this is a longer term view. We've got almost 2 years of price data going here, but again, it really highlights the longer trends, and I use the Renko for getting into those. You can do it in quicker time frames if you want. Nifty50 is brilliant for this. I back tested this. I like trading this using the Renko charts. It is a really good one to get your teeth into, especially if you like the Nifty index. So not much to it again, because I like simplicity, and there's various strategies that I play out with inside this setup. Quickly having a look at one, we've got like a box breakout. So if my trend direction from whatever research I've done saying that the Nifty is going to be bullish, I look for buy signals to break out and trail up those buy breaks. Simple as that. Again, keep it simple, works really well on the Nifty. And our third and final setup for all you speed traders out there. Well, we've got a 15-minute Heikin Ashi chart. 15 minutes because it gives you enough chance to trade intraday and clear that spread. Plus Heikin Ashi because it sort of, keeps you in that trend longer. I find that using just ordinary candlesticks you can get trigger fingers and get out and in when you don't want to, but this allows you to ride that trend a bit longer. Again, combination of indicators in there, mainly based off the regression lines at the bottom. When they change to the same colours as the trend, I go in. A bit more complex than that, but that's the basics behind it. But I wanted to show you that intraday the Nifty50 has some nice ranges that you can take advantage of, and this sort of setup, why not? Hopefully you can now see why you should possibly consider trading the Nifty50 in 2021 and how you could trade it using those different setup types. So if you've liked the video, please hit the thumbs up button, and if you want more information on trading and some of the great stuff that I'm going to be putting out over the next few months, hit that subscribe and the bell button. And if you want to find out about Renko, Kagi, line break, all those type of chart types, or anything else in today's video, then it's all in the description below. I do some fabulous courses on the Udemy e-learning platform around those subjects. Check them out. And if I don't hear from you before, hope to see you in the next video.